A lot of traders don't really know how to spot a truly high probability opportunity. They chase every little move, burn themselves on tiny time frames, and completely miss the trades that actually matter. I know, because I used to do it. In this video, I'm breaking down one of my most explosive trades, a 10x move, and I want you to feel what the real opportunity looks like on a weekly time frame. By the end, you'll know the 6 signals that turn this trade from interesting to absolutely unavoidable. Remember to subscribe for more insights like this. Let's dive in. And now I would like to show you one of the cleanest trade, one of the best trade that I ever got, basically. This was from early 2024. And we have a just beautiful consolidation pattern on a weekly time frame on super micro, right? So at that time, I mean, that move, basically, you can see, right, the power of that move, right, to the upside. This coincided with actually also NVDA breaking to the upside. It was the microchip AI kind of boom of early 2024. And I don't look at that news or necessarily industry or vertical strength, right, to trade. I'm just looking at what the charts are telling me. But it just so happened that that trade happened at the same time that that sector was booming. So that was an amazing trade. And I love to see that, right? So there's a few things that I look for when I trade, right? This is for me like really A plus setup. I mean, it's really pretty. This is in a weekly time frame, so you can see basically how long and how tight this consolidation was, right? So there's 6 things that I look for when I want to trade stocks. The first one is I want to see a strong momentum, right? So if we zoom in a little bit, you can see basically how these stocks just kept going, right? We have a strong momentum, and that's what I want to trade. I want to trade stocks that are doing well. I want to trade stocks that are strong. So we definitely have that here. The second thing that I want is I want a clean consolidation pattern. So usually I go for, a cup and handle or really like tight base, tight consolidation. And we have that here very much. I mean, look at this. This was just pretty. We had a drop from the high here and we had just like boom, 1 time, twice, 3, 4, and break, right? So that was like really pretty, right? When I see that, I just stop when I'm doing my screening. The other cue that you have is the Bollinger bonds, right? The Bollinger bonds are just, horizontal, very tight, even pinching at the end, right? When I see this, I stop immediately. I'm like, wow, we might be onto something there. So we definitely have that here for that trade. The third one that I'm looking for is an obvious resistance line. So yes, we want strong momentum, we want a clean, tight consolidation, but we want that to be really under a very clear resistance area, right? I want the price to bounce, as I said before, to bounce back and forth in a tight manner around that line. So we had a couple excess here and there on that pattern. However, we can see that price really held really well, right? Really well. So I want to see that this might not be absolute perfection there, but it's still really qualitative. It's a high quality setup, right? So I love that. I want to see that. So that's the third point, and yeah, we definitely have that here. Number 4 is toward the end of the consolidation, right? Right before the breakout. So in that area here, I want to see a reduction in volatility. I want to see, so I already want to see basically a tight consolidation, right? And toward the end, I want to see the price that are getting tighter and tighter, really like stuck, blocked under my resistance line with a contraction of volatility. And it's like, it's cooking, right? It's cooking, it's getting tighter, it's getting ready to burst. So I want to see that on the patterns I trade, and the tighter is going to be, the higher the contrast between the first part of the pattern, the best the opportunity, the most explosive. And here we had something really tight, right? You can see how here we had amplitudes like this, right? About the same there. And then look, one reduction, one little hole there, bottom, another one there. So you can see the trend, right? This is basically, we had a strong move up, we dropped, and then we consolidated 1, 2, 3, 4, 5 times. We are bouncing off this level, and towards the end, we are getting closer and closer, and it's getting really tight. Like this thing wants to burst. That's what you want to look for. You want to look for things like that. So, do we have that here? Absolutely, right? We absolutely have that here. Number 5, I want a clean breakout. I want a breakout that's going to close clearly above my resistance line, that is not going to be too shy, also not too big. If my breakout would have been, say, over there, I mean, it would be way too far above my key level, right? But this, we had a beautiful breakout. Beautiful. So we definitely have that here. You might want to use as well a smaller time frame, a lower time frame, in order to time a little bit better your entry. But that could very well work as well, right? So here, so again, we are on the weekly time frame. The green line here is my entry. This is where I entered that trade. And the red line there was my stop, right? So that's basically, that's what I call my R. That's my unit of risk, right? And I'm going to use units of risk to monitor my trade, to manage my trade. And depending on how fast price is going to basically go, how fast or how low or how much is going to go or drop, I am going to manage my trade accordingly. One final thing that I want to look for is I want a clear increase in volume on the breakout. And that's what we have here, right? Right there. We can see that there on this candle, the volume started to ramp up, right? Compared to the average in blue, broke. So increase in volume, you can see here reduction in this like tight range consolidation. The volume dried out. Basically, yeah, everybody was hanging on to their stock. The volume dried out. And then when we had the break, boom, we break the key level very clearly, right? We very clearly break this. It's like this is a multi-month consolidation. We break it, powerful break, clean, and an increase in volume. That's what I want to see. And here it was super obvious, super clear, amazing. So I would take position like this, such as this, right? Entry, stop, and I would follow along. So let's see how far this went. So I exited that trade at 90.2, right? So that's a 10x, you see, right? That's a 10x, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10x on my initial bet size. So, I mean, there are many ways to go about that, right? As I said, you're going to want to have a strategy that is adaptive based on how fast, basically, markets are ramping up. Based on the rate at which the price is going up, you're going to want to manage your trade and exit your trade accordingly. So there are a few case scenarios, right? One of them could be if we zoom back here, right? We can see that price was building a staircase, right? Step, a step, a step, a step, and then boom, explosion. So now we have kind of a climax run, right? So you need to have a way to manage your trade, maybe trade your stop when you have such slower, steady scenario, and also when you're going to have an explosion climax run, because you're never going to be able to time the top, right? Or maybe sometime you're going to luck out, but you need, basically, we don't know how far a trend is going to go, right? That's the principle of a trend. We don't know how fast it's going to go. So we need to have a way to stick with it and to squeeze as much as we can out of it in a systematic way, right? I do not rely on judgment to manage my trade. I just have a very precise plan. It's mechanical. If A, then B. If C, then D. This is what I do. And following that plan here allowed me to really stick with the trade as long as possible and to exit right over there. So you could tell me, oh yeah, but you know, I mean, price went as high as like 107, and then even 123. Yes, that's true, but I don't know that in advance, right? When I'm trading, I mean, this is all I see, right? I just see these last few candles, and that's all. So I need to make a decision based on that. It's always easy in hindsight to tell yourself, oh, you know, you could have just held the trade until there and exit there. It's very easy to say that, but when you don't see the right side of the chart, this is another story. So this is where I exited following this really powerful burst of like multi-week, right? And I mean, that's pretty good, right? Yes, we are not all the way up, but we literally got 2/3 of the trade, right? We went almost to 1 to 16 based on my risk size there. 1 to 16, right? Right over there. Right over there. And we went to 10. So we got 2/3 out of that, and that's really good. I mean, look how far this dropped right after, right there. That's a drop. So, you know, it's sitting inside to say, yeah, you could have held it and exit there, but no, I don't know that, right? Look, from here, from this top, we dropped all the way there, right? That's a huge drop. That's like 50%, right, of my trade. I am not gonna let the price do that. So you need to have a way, and then we bounce back, and then we dropped. And we dropped a lot, right? So I mean, if you look at that, it's not such a bad exit, right? Because yeah, we didn't get all the way up, but we got a big part of the meat, and look how far it dropped back after that, right? And we never came back there. So this is how I operate. These are the things that I look for. This is what I love to trade. Yeah, so, you know, if you'd like to learn more about this, you know, feel free to subscribe, drop your mail on my website as well. And that's all. That's all for today. So thanks for watching the video, and see you soon.